Hi, and welcome to the market alert for Tuesday the 25th of April 2017. And yesterday, let's go back to Sunday evening first. We saw the market gap up 172 points after the first round of the French elections, and we saw Marine Le Pen coming in second. This is good news for those who vote for the centre, as it were, and we see the market gap up. This is handy for the Europhiles. We can see how the market played out in the pre-market session. It took a while before the market actually broke through the 20,750, and then we got into the session and we saw the market trade sideways. And as I said in my note yesterday morning, these gap ups are designed to bring people in, then they drop the market, then the market finds support, which you see here, and then it goes. But the first thing to do is to pull people in and then drop it down. So that's a tried and tested formula, which is why I sent the note out yesterday morning. And then you see the market again coming back to this resistance level, which we'll look at in the daily chart in a moment. And then overnight you can see the market's managed to continue to the upside. So in the daily charts, this is where it's interesting. We've got this resistance area here where we saw some selling. That's going to be at the 20,888. So I'm going to keep that in on the chart, see what happens there. Also, if we go from this high to this low, we should just have broken through the 76% retracement, which we have. So the recent high is the next upside target should the market continue to move higher there. So an interesting picture. No great volume in the market at all. We've got average volume, but it's the gap up to move higher. Also notice that the average is green because they wanted to get the market to the upside. It kept banging its head against it, which I pointed out last week. And anyway, if you can't break through a fence, then jump over it, and that's what we see here, where the market's done precisely this in order to move higher. It's very strange at the moment. There's something quite eerie about the markets that is not normal, and you know, in 20 odd years or 20 plus years, it's just something doesn't feel right at the moment about the whole way the market is actually acting and reacting to global events, whether it's Korea or whatever. It just doesn't make any sense at all. News wise, what have we got today? Let's have a look. New home sales are out at 3 p.m. along with consumer confidence. That's a high impact news item, but I wouldn't be too concerned about that one, because it's forecast to come out more or less the same as the previous as well, and it's not exactly the Fed speaking or anything like that. Again, high impact news items do have a certain degree of flexibility, as it were. You can actually trade through, and this one isn't no exception. It is Tuesday. It'll be interesting to see how the market absorbs what happened yesterday with the French elections, whether the weakness returns, even though the market's up at the moment. And again, the first hour will probably be the busiest, and then after that it will go quiet. And on the implied volatility front, this is the biggest clue that something's not right. Look at this massive drop in volatility yesterday to 843 from the 1068 of Friday. That's an elevator drop. You know, we've got the stairway up and the elevator down. That's massive. So something is afoot. There's no doubts about that. This is not right at all. There is a correction coming in this market without a doubt. It's just a matter of when it puts in its appearance. But given the figures, every time we've dropped down to this level, we've had correction, and then we had a bit of a correction down to there, and then the implied increased, and now we're seeing this again. So expect another correction in this market anytime soon. And that's really it this morning, because there's not a lot else to report. It just seems eerie, as I said before, very odd, very strange. It's as if something is waiting to happen. Right, that's it. I will report in later today. Other than that, thanks for watching. See you in the next one.